Hello, everybody. It's Jeff Gibby over at MetaStock. I hope you're doing well today. Thanks for coming. We've got a good class lined up for you, and we're going to have Panos back for an encore presentation. And he's going to talk about DomiStock. So let's go ahead and get started. Going to start with your favorite part. Today's demonstration is designed to instruct you on MetaStock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock shall have no liability for any investment decisions based on the use of their software, any trading strategy, or any information provided in connection with the company. So let's talk a little bit about what we're going to, Panos. Panos is located in Greece. He's written a couple of basically books in Greece for the technical analysis market. Very, very smart technician. Has been learned how to do technician from John Murphy, and somebody that actually kind of consults a little bit with the Greek government when they have questions about kind of what the market is doing. Very, very popular. Very smart guy, very nice guy, and has written one of the most extensive add-ons available for MetaStock. It's a very, very large program. Because it's large, we want to actually train you on what it does and how it uses it and how to use it. And so that's the idea behind these workshops and techniques. Let's go ahead and bring Panos' screen on here.
Are we good to go?
You're ready to go. Is there anything in particular you want to tell us about yourself before we let you get started?
Okay, what I want to say is that if we have any questions and you think that we should interrupt, then it's better to do it so that we don't leave any questions unanswered, as long as we manage to keep the flow a bit of the presentation. So I leave it to you not to leave too many questions for the end. Okay?
Okay. That sounds good. Do you know how to see the questions as they come in?
Okay, you know that I'm completely new when it comes to this, so...
All right. So do you want me to kind of monitor the questions, and when there's something that's pertinent, I can kind of chime in?
I prefer that, to be honest.
Okay. Fair enough. Let's do that. All right. Then the floor is yours, Panos.
Okay, so I'm going to cut through to the chase. No marketing, no nothing. Let me try to help you see things the way I do. Now, I have been consulting funds, hedge funds, governments, and even casinos when it comes to the way they manage risk. And just 3 months ago, I got an offer to prepare trading algorithm based on DomiStock for a fund which is about $500 million, €500 million. It's a Robo fund. So what I'm trying to say is that markets, the mechanic of markets is partly political, partly financial, and partly speculation. I've done it all from a professional point, and that helped me to put together algorithms that take under consideration all these parameters. Okay, so this is from DomiStock, and this is one of the portfolios, the built-in portfolios that DomiStock offers. And let me show you. Okay, now this is a portfolio. We're going to talk about it in a minute and explain to you how we use it. And through this portfolio, I'm going to present to you as much as I can from this very, very big add-on, MetaStock add-on. Okay, so let me start by telling you that large funds, either hedge funds or investment funds in any way, they have, there is a meaning I want us to understand. They have a target portfolio and a current portfolio. Now, the target portfolio mainly takes into account the desirable monetary size, how big this portfolio they want to be, the risk aversion, how risky it should be or not, the basket of asset choices, the forecast of future prices, and in general, all the parameters any specific fund sets. As the market opens in any trading session, a trading algorithm makes the necessary adjustments to bring the live portfolio, because that portfolio now is live, is moving, in line with the target one. To avoid causing significant price movements, because we're talking about large portfolios that have a lot of money, millions, hundreds of millions, to avoid causing significant price movements that could disrupt the market and jeopardize this adjustment that they're trying to do, which is trying to bring in line the current with the live portfolio. In order to do that, the trading algorithm breaks down the large trades into small ones, slowing down the rate of adjustment and the impact on the market. If they don't do that, they're going to cause a huge market move, which can jeopardize what they're trying to do. So they might move the market in a way that it's not in their interest to do so. That happens when we have a crisis, when we have a shock, when we have a piece of information which is extremely bad, and the algorithm sells, or it's a person that sells everything at once, or many algorithms together execute similar trades, and that's when rarely we see very large moves. What usually happens is that these large moves, these large trades are broken down into very small ones. Okay, now, before the trading algorithm makes these trades, there is another algorithm which is called the portfolio optimizer that looks at information like historical prices to calculate volatility, and they use volatility to adjust risk. That if the volatility is a lot, then they might suppose that they have Apple in their portfolio, and Apple moves in a very volatile, makes very volatile movements. They might change 30% of Apple with something else, which is less volatile. So they use volatility to adjust for risk, and they use historical information, historical prices, to make forecasts as well. They use other things, but they use historical prices as well too. So, in fact, the portfolio optimizer creates a new target portfolio constantly. Okay, so now here we have a portfolio. Now, it's a portfolio with a few inputs. There's in another MetaStock's version, there might be even more inputs that we can put. So here, what we need is 4 choices. This is a US bullish high-risk portfolio. To show you what it has done so far, this is a 300 period performance of this portfolio. The performance is 84%, and this is the performance of Standard & Poor's, and it is 17.8%. So this performance here is much bigger than this one. And if you have DomiStock, you will see that I have not changed at all the weightings here. This is how it's actually constructed from the beginning. So how is this constructed from the beginning? If you go to the exploration, you will see that there is a DomiStock portfolio weightings exploration. Now, what this does is, now here I have all the DomiStock securities, the securities that I have in the portfolios. There are 10 portfolios. And we have the securities here. We're going to see them better for the many different kind of portfolios. You can make a list. You can see the securities, or I can make a list and you can download it from MetaStock's website or from DomiStock's website. Okay, now what I do and what fund managers do, this is as simple as it gets. We run this exploration and we get the weightings, and we get 2 kinds of weightings. We get the weightings for the long side and the weightings for the short side, for the hedging that we should use. I will go to the report, then we're going to see. Now, this portfolio uses the SPY, which uses the, I think this one, yes, the double, the U Pro. It uses the TNA. Let's see something interesting here. Okay, if we go to the U Pro, it says that the maximum weighting you can use, the maximum weight of U Pro in your portfolio should be 60%. You should not use more. How much of a hedge you should use when you use this one, when you use U Pro? 0. So in another way, it tells you that it's quite safe for the moment to keep this completely on the long side. But not the same thing happens with TNA. It tells you that you should use a very, very big hedge. You should use 100% hedge, which means that you should actually neutralize this one in your security. And let me go back to demonstrate a couple of things. Okay. On this ribbon here, you see that we have something called winner, and it's a quantitative analysis which comes down to 3 words here: winner, loser, and neutral. Okay, now this considers that SPY is a winner, which means that the forecast is that it's going to go further up, and you can see that it has been a winner forever, even here when it dropped. Now, these bullets that you see here, these are alerts where the algorithm that I'm using, which is similar to the algorithms I am creating for hedge funds, it shows that these are adjustment points. These are either points where there is extreme supply, and it is most probable for a portfolio, a huge portfolio, to make adjustments. And here, the adjustment it might make is to go long a bit more. It considers that this is an entry point, so an adjustment point for the long side. And these are points where they might reduce risk. And the way they reduce the risk is by either selling some of this security or of the long side, reducing the long side of the portfolio, or by buying some hedge. Now, this thing that you see here, everything might seem weird now, but they're very, very simple once you understand the concept. Now, this shows that the long side has been intact for 148 trading sessions, periods, days. Now, and you can see here that we have some minor red lines, which are which indicate the different periods, the different time frames where a portfolio, a big portfolio, would have made some adjustments, would have gone on the short side a bit, but still keeping the long side intact. Okay, now, here we see the weights. These are the weights. So the U Pro has a 45% weight in this portfolio. The TQQQ has a 35%, and the TNA a 20%. But as we saw, the exploration told us that this should be neutralized. One way to neutralize this is to take it down to 0 and not change anything here. Or you can add something to your hedge, which is the SPXU. Okay. Now, this winner and winner ribbon here, let me show you something. Is part of something called technical rating system, and there is a technical rating trading system available for you in this DomiStock add-on. Now, what this does, it uses algorithms that funds use as well. So in fact, what I'm trying to do is, I know for a fact that let me show you something. I don't know if you have, if anybody was here in the previous seminar, but let me show you something. Now, DomiStock has gained very much accreditation by huge universities like the Columbia University, the financial engineering department, because, and it has been selected twice as firstly, it has been the Robo advisor of choice in a huge project, the national project, and it was the software used in an antagonist, in a competition of different stock trading systems, and it ended up first by performing with a great performance. Okay, so what I'm trying to tell you is that what I try to do in DomiStock is to bring these two worlds together, because I have noticed in the two decades that I have been trading professionally that hedge funds and large funds are more sophisticated than the individual investor. And as you will see here, the only way, there is a great Harvard research that shows that 80% of investors tend to lose in the stock market, of individual investors, and there's only a 20% that actually wins. And the answer that they give is to why this 20% is on the winner side is that they are much more sophisticated. They use better tools, and these tools are difficult to find. So what I was trying to do when I built DomiStock is to take some technology of what the best funds use and try to build it in an add-on for MetaStock and help you see what they see, but also give you tools to speculate, give you tools to anticipate what they are going to do. And as you know, large funds, huge funds, they are the ones that move the markets. Okay, so this is a technical rating system which uses a very, very nice algorithm that rates a security, any security, from A, which is the best, which means that the technical rating, as you will see here, that the rating is, the status is positive and the outlook is positive. So this is as good as it gets. To CC, which is negative, loser and winner, this is where the winner comes from. So this is an A security. We don't know if it is an AA. We have to see it here. This is an AA security. I'm talking about Southern Poor's, okay? And now, when we have an AA security, that means that it is most probable that large funds will keep it in their portfolios, and they will just make small adjustments. And these are the adjustments that they do. These are the adjustments, like here. So when you see these bullets here, these are all entry points, because this is an AA security. This is a security that large funds would consider a good opportunity for their portfolios. And at these specific points, as you see here, with almost 100% of accuracy, they will adjust it on the long side. So when you have an AA security, you will see that I have some automated, we go here, automated trading techniques, which are trading strategies, DomiStock trading strategies. What they do is they check the rating of the security, and they tell you which strategy can be used, and in the percentage, like, let me show you. So it says that if all criteria of a trading strategy are met, the scan returns a value of 100%. That means that all the criteria that you need to take advantage of this strategy are already there. Now, a 75% value score is very, very good. 50% is, you should be very careful. So here, this strategy that we're talking about, the AA strategy, when you have this kind of bullets that we call them extreme supply or deflated points, is long, the strategy is called long the deflated winner. So this is a winner, it is deflated, you should long it. Now, let's move forward because there's so many things I want to show you. Okay, so we have the portfolio optimizer, which makes the forecasts. And we saw that this one, the TNA, according to our algorithm that we executed with the exploration, is a no-no now, should be cancelled. But why? Let's have a look. Okay, so this is the TNA, this is the stock, this is the security, the ETF, that we found out that should be neutralized, either with a hedge or with any other way that we think. But why? Because this is an AC. It has an A rating because it has been gone up. Look at that. It is a winner stock. It is a winner security, but it has a negative outlook. And hedge funds see that, see this negative outlook. And the forecast they make is that this one will probably move sideways. And they make adjustments. And these adjustments are very important. Now, at this point, I wanted to let me make a parenthesis and tell you something. Let me show you something. Okay, I think I found it. Yes. Okay, now there are some amazing DomiStock on chart tools. The auto support resistance lines, the trend lines. Why did I make this? Because there are so many theories about support and resistance levels that if you actually apply all of them, you're gonna, and if you're using a black chart and you use a white support resistance lines, you're gonna end up with a completely white chart. Because if you use Fibonacci levels, if you use the Gann theory, if you use the traditional support resistance levels, if you use the trend lines, if you use the moving average, which are moving support resistance, if you use all of them, you're going to end up with 100 support and resistance lines. And of course, as you can understand, if you use 100 support and resistance lines, it's like you're not using any. So what I've done is I've taken all these theories, every theory that you know about, I made it an algorithm and let the system, let the algorithm decide which ones it should apply. This is imperfect, but everything is imperfect. Only God is perfect. So, but this is really good enough. It's actually the best around. And what it does, have a look. Let me take this away. Now, it shows you the trend line. Everything that you see here is auto-drawn. Let me get rid of this one. Okay, these are support resistance levels. So what I was trying to say now, and I took advantage of what's going on, is that at this level that you see here, in the past, in the recent past, DomiStock produced a deflated alert, an alert that the price is deflated, and it went all the way up. Now, we are close to the same point. That means we don't have this alert here, but we had it. That means that point, some days ago, trading algorithms similar to this one that funds are using told them that this was a bargain. So you should be careful when you're coming here, because you have a support and you have a previous deflated sign here. But that's not the only way that optimizer works. Now, let me get this paper back here. You see that I have the nearest support resistance highlight. Why do we have that? These yellow lines here. These are the closest to us support and resistance levels that make that we should pay attention to. Why? Because first of all, these are used like targets, but you know that already. A target for the long trade, a target for the short trade, and second of all, these are the closest ones. So these are the first ones. If we're going to have a resistance breach, a resistance breakout, this is the resistance that should be broken first. And now, since I said that, there's a very nice exploration that you can use to find if there are, it's called support resistance, and it's somewhere here in this 50 different explorations. Here. Okay, so what this does is it shows you if you have a resistance breach, it scans securities that have just broken resistance or support. Okay, and it really, really works because it takes under consideration the theories that I told you. So this is an advanced algorithm. Okay, let me close this one again. So now TNA has been rated AC, and this means that the forecast probably is that it's gonna move sideways, and sideways means probably that it's gonna move when it's gonna go up when it tests support levels like this one. So here's a trade. But this is not the only algorithm, the rating algorithm that funds use to make these adjustments that the portfolio optimizer works with. Let me show you something which is very, very interesting. This is a forecasting matrix. The name is very fancy, so forget about it. That's not the point. The point is that what it does, it uses something called a profit loss calculator, which is, I'm going to show you the calculator first. But let me show you first something. This is TNA, the TNA that we were talking about. Now, this is the forecast for today, and it shows you that although this, and you should have seen that half an hour ago, that was down 3%, and that was about minus 0.8. That showed that it didn't believe that this would close today at 3%. It believed that it will go higher than what it is now. And it still believes that. It still forecasts that the minus 1.23 is a lot. Now, this is for the one session. However, if you see the 15-day forecast or the 50-day forecast, they are to the downside. And these are algorithms that funds use. And let me take you back to, and you can change that. You can make that 30, 50, and I'll show you the calculator better here. Okay, now, almost every template of the 4 trading systems provided by DomiStock have this calculator here. Now, this is the maximum profit loss calculator. This is something that a portfolio optimizer uses. And what it does, it gives you a forecast according to percentage, to probabilities. So there's a 65% probability that this stock will close will be lower than it is today in the next 15 trading sessions. That's what the forecasting matrix does. It gives you many different points, and you can add more if you want. But be careful, because this is a heavy tool. So if you add 10 of them and you have live data, it's going to slow down your processor. Okay, so today though, it tells you that it should close higher than what it is now. Okay, so this is the maximum profit loss calculator, and I talked to you about the automatic trend lines, the support lines, the technical rating, and it all started from our portfolio and from the acknowledgement that the worst part in it, according to the exploration that we saw, was TNA. So let's have a look at this stock with another system, the HighLow trading system. Okay, so let me show you something about the HighLow trading system, if I find it. Okay, this is a signal producing system. It does nothing else but produces signals. It's the second one in difficulty, or not in difficulty, in computing complexity, because DomiStock offers 4 different trading systems. The first one, I know I'm jumping from the one thing to the other, but that makes it more interesting. Okay, the first one is the dual band trading system, and I'm going to show you a trade I made yesterday in the euro, and I'm going to explain to you exactly how I did it. And this is a profit boosting trading technique. It's going to really help you a lot, and that's a very, very easy system. So the first one is a dual band trading system. The second one is the high-low trading system. It is a signal producing system based on the relationship of the securities price with the band derived, blah, 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 whatever. Forget about that. Let's not go to the theory. Let's just see the commentary. Okay, now, the only thing this thing does is tell you if there is a signal. That's it. If there's something you can do. At this point, you get 17 no's. There's nothing you should do according to the system at this point. But if we went back in time, just a little before, then you would see that there was a buy, a secondary buy signal. But let me close that too and take you back to. First of all, are there any questions? Because I've been talking for a while.
Yeah, Charles asked, with regard to your point about large institutions who break up their transactions into smaller pieces, what do you have to say about institutional activity in the dark pools?
Okay, you know that the dark pools are a growing in significance part of financial markets. And it's a different story, but it's growing. And it's very difficult with this kind of tools to take advantage of moves of trades that take place in the dark pools. But I have a theory about this, which says that you might not see gravity, but you can feel it. And sometimes you might not see the sun, but you can see the shadow. So whatever happens, whatever takes place in the dark pools leaves their fingerprints, their prints in the markets. And we have the tools to sense them, to understand them. But of course, it would be perfect if we had a DomiStock for the dark pool and take advantage of these trades there. Any other questions? I'm going to be offended if you don't have any questions. Please ask something.
That was it so far.
Either you don't understand anything, either I'm such a horrible presenter, or I don't know what's going on. Okay, I need some feedback. Do you want me to stop? Do you want me to tell you something else? Is this completely boring? Is it interesting? Anyone? Please type something there, because I feel that I don't know what's going on. I want to know. Anyway, so by the time you let me know what you want me to do.
Okay, so we do have a little bit of solicited feedback so far, Panos.
Yeah.
Charles says, this is excellent. And Brad Griffiths says, this is very interesting. Joe asks, can any of your systems help with day trading?
Of course. Let me show you a trade, if I manage to do that. Day trading, intraday trading, but I'll show you one of my favorite techniques. I actually used it yesterday, and I made some money. Okay. I hope this works, because it combines intraday and daily data. Let me close this one. Okay, so I actually used this. Yeah. Okay, just give me a tiny second. I took a position, a long position in the euro, and I think I have the example here for you. Do I have the example here for you? Anyway, I'll make an example now for you. Okay, so we can close this one. And let me open, this is the very first trading system, the dual band. And I think you're going to appreciate it, and I think you're going to understand it in the next 3 minutes. And if I'm wrong, I want you to tell me that, Panos, you were wrong. Okay, but first I have to find it. It's this one. Okay, I'm going to need this. No, sorry, I'm not gonna need this. I'm gonna need something else. Okay, I've got my papers here somewhere. My Word document. Okay. Okay, guys, it took me half a day to manage to write this sentence. Believe it or not, I didn't know how to write it. My English is not that good. And so I hope this is gonna help you understand in this paragraph what this system does. The very first one of the DomiStock 4 trading systems. Okay, so this is a trend strength identification system. That, step one, it represents a securities price, so the closing price, by the number 1, and the value of 2 different in time frame bands, different bands. One is longer and the other is shorter, by the numbers 2 and 3 accordingly. Okay, so this is a trend strength identification system that, after representing a securities price, blah, 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 studies their relationship and their slope and segregates the price action, divides the price action into 8 chart patterns, with the most bullish being the 1, 2, 3 up, which occurs when the shorter band is above. We're going to find an example. I'll show you how I entered the long trade yesterday, because I found that 1, 2, 3 up pattern. When the shorter band is above the longer one, and the securities price is above all of them, with all 3 moving higher. So this is a hierarchy of different time frames of the securities action, price action. We want the closing price to be the champion, to be number 1. Now, if it is number 1, we don't necessarily want it, but when we see it, we know that it is the champion. And but you will probably ask me, okay, but if we see it, Panos, that means that it already happened. And this is where the theory that I explained to you before is very important. The large funds cannot make huge adjustments with large orders. They have to make them slowly. And when they do that slowly, they affect the microstructure. They affect the micro world, the micro stock market world. And we can see that. So if we find a if we find, and forget about the A rating, I'll tell you about the A rating later. But suppose that we find a stock, a security, an ETF, I don't know, a Forex, the euro or whatever, that gives us a 1, 2, 3 up chart pattern in the 5-minute chart, or the 10-minute chart, or the 30-minute chart, not higher. Then we can go long and wait for it to expand to the hourly or the 30-minute or the daily chart and take advantage of that. So what we're doing is we're forecasting that what we see now is going to expand in the considerable near future. And we don't wait for it to be established on the daily chart. We do it before, on the 30, and this is the zoom in, zoom out trading technique. Most of the things I'm talking about are either, how do you call that, patent protected methods or trademarked methods. These are methods I have been using for years. Some of them are trademarked 15 years ago, and I have been using them forever. So the zoom in, zoom out trading technique makes you see both the long and the shorter period and take advantage of these delays. So because we know, if we understand how the mechanics of the market work, then how the fund managers, the large fund managers, the fund managers of large funds work, and we bridge that gap and take it into our knowledge, because we're more flexible. We don't trade with 200 million. We trade with some thousands, and that makes us more flexible, and we can do whatever we want. And we should use that flexibility to take advantage of this kind of information. So I think I can find this. If I go to the, so another thing, I want to go to the, okay, what is it? This is the TNA. I don't want the TNA, of course. I want the euro. Okay, so this is the 30-minute chart. Anyway, okay, what I'm doing is I'm actually going down to the 5-minute chart, maybe the 1-minute chart, the 5-minute chart. And let me now tell you let me be very, very sincere. I prefer to find an A-rated security, and let me show you something. I'm going to go to the daily one, to the daily chart. This is going to go away in a minute. And if I apply the DomiStock rating system, then you're going to see that this one has been upgraded. But this has not been upgraded by DomiStock only, because DomiStock uses algorithms that are similar to the one that the funds use, which means that the fund managers have seen that as well. And they have seen, maybe they have caused it, maybe they made it happen. I don't know. What I know is that that was a C-rated security, and now it is an A-rated. So what I did is I took advantage of that. I found an A-rated security, and let's suppose that I was away, I was in vacation, and I came back yesterday, and I didn't know that that was a huge move. I missed it. Okay, so what? What can I do now? No problem. What I can do is try to find what I saw yesterday was that, let me show you. So yesterday was the 30th, sorry. So we're going back in time. Okay, now that's the end of the session. I showed before the end of the session. It was about 6 o'clock in the afternoon. It was about 6 o'clock in the afternoon Greek time, which was about 12 o'clock US time. So what I saw was I had 1, 2, 3. I used to have recently a 1, 2, 3 chart. Okay, so here the price was up. It was above the shorter band. These are these bands have some theories, some algorithms. They're auto-adjustable. They have volatility. Anyway, nothing difficult to follow, but they have some good mathematics. And okay, so I had the 1, 2, 3 chart, and they were all up. But I got this inflated price alert here. How do I know that that's an alert for inflation? Because if I get these alerts at the beginning of a move, at the very beginning of a move, and it's not a C-rated stock, it's an A-rated stock, then that means that it is excess demand, which doesn't really bother me because this is an A-rated stock and it's the beginning of a move. It's after a correction, so it doesn't matter. But if I get it after a longer move, that means that for now, the trading algorithms that follow this move consider this to be not cheap, and they might make adjustments. And these adjustments is something you should take advantage of, and you should be protected from if you're long. So these points here tell you, be careful, because this thing is getting a little bit too hot for the algorithms that the funds are using. So be careful, they might make some adjustments. Now, you see the automatically drawn trend line here, which is nice. It's like a person did it. You see the resistance level here. You see the highlighted resistance, the closest resistance and support. And when I saw that, and it was lower, and I was actually preparing this seminar, webinar, I asked myself, okay, maybe I can make a trade here. And I went down to the 10-minute and waited for this to start. Of course, now we have it's not live, but anyway, let me see if I can find what I did. Otherwise, we're gonna just imagine it. Okay, we're getting closer. Now we're not. Anyway, we have to go to today to understand what happened. Okay, let me go to the daily chart. Sorry about that. It would be better if we could do that live, but that means that we should build a machine to go back in time. Okay, so let me go to the 30-minute chart and try to tell you finally what I'm trying to say. Okay, so you don't have to wait to see a chart pattern here in the daily chart, on the daily chart. You can anticipate it by taking advantage of it when you see it on a smaller period chart, on a minute chart. That's what I did yesterday with the euro. I opened the trade using the 10-minute chart, and then it expanded. And if it doesn't expand, that means that your timing was not the best, and you can actually make it more accurate. I forgot to tell you, you can see the rating here. This is the micro rating. This is the macro rating of the stock. So you have, you know about the high frequency trading, you know about how everything is being evolving and changing, and now robots are doing a lot of algorithmic trading. So there is a new micro world, and they use ratings, they use algorithms that rate stocks in the micro world as well. So you don't have to see an A rating necessarily on the daily chart. You see how this moves here. You see the targets, how the targets change. This is the forecast. This is the forecast for the next hour, I think. This is an hourly chart. So it gives you the forecast for the next hour. It tells you that it should go from 0.03 0.04 to minus 0.0. So it tells you that it's going to go probably with 66% probability higher. Okay, and this is the resultant direction. But forget about that. Just tells you the most probable direction it's going to go, which is this one, here. And if it is positive, it means that the forecast is positive. And why is this important? Because this is what they see as well. You can see what they see in a way, and you can adjust the way they adjust. Anyway, so.
You want a couple more questions, Panos?
Yes, of course, of course.
Okay. So a question from KC. He wants to know if it works with ETFs like SID, KIDS, DZA, like ETF, exchange traded funds, basically.
Of course it does. Most of them here, well, most of the portfolios, and if you see, thank you for this question. We have some cross-asset templates, and 90% of them are with ETFs, and the portfolios, 90% of them, 95% of them are with ETFs. I'm working with ETFs a lot, and I advise customers to do the same. So yes, it's perfect for ETFs, but it's perfect for Forex too. It's perfect for almost everything. I use this for bonds. I'm using this for professional trading with minimum risk or with high risk. So yes, it's perfect for ETFs. Another question, Jeffrey?
Yeah, okay. You're the boss. Let's see. There was one I wanted that was in here. Matthew asked, how would you explain how to get started with your systems to a very new trader?
Yeah, what I would say to a new trader is, we have something called the DomiStock school, which is, first of all, there is the manual. These videos, these webinars we do with MetaStock, but because this is not the your common add-on, this is sophisticated enough to make you competitive to large funds. We have something called DomiStock School with the DomiStock blog, and you can go there and see how I use it every week. And you can go there and see a lot of video. And if you have questions, you can always email me through MetaStock, and I'm always there because I do understand that there is a lot of things here, a lot of stuff. This is a mind-blowing add-on. But if you really want to make it, you should try to get into the 20% of the traders that win. This category, and these traders are sophisticated, and this is the future. Even if you don't change, the future is not going to wait for us, because things are becoming more computational anyway, and things are becoming more advanced, and this is the way to go, to get back and make things more simple in the way that they're not that advanced. Is not an answer, because everybody's getting more advanced. So you should get more advanced too. And DomiStock does that. So we have a DomiStock school, we have the MetaStock webinars, we have the manual, we're there, we have the blog. This is a marathon. This is a marathon. We try as hard as we can to help you.
Okay, two more questions. Question is there a recommended minimum portfolio for using this?
Now, are you talking about these portfolios that we have here, or you're talking about DomiStock in total?
I think what he means, and he can correct me if he's wrong, is if I have $5,000, is that enough? If I have $10,000, is there a minimum size my account needs to be to successfully use the DomiStock product?
So my answer is this. If you have 5,000 or 10,000, this is your 100%. It doesn't matter if it is a million or if it is 10,000 or 5,000. You decide how much of protection you need, and you decide how much you want to invest in your 5,000. So this is an investment. This is a serious investment here. So it's up to you to decide if the 5,000, which is your 100%, is enough to invest, to protect it, or invest in it. It's not up for me to say, but if you want a very mathematical answer, then even if you have $1,000, it's better to have a very sophisticated weapon, because this is a weapon. That's what it is. The stock market is a fight, a constant fight, and this is a weapon. So it's better to have this weapon than have no weapons at all, or a weapon which is not adequate enough. I don't know if I answered, but that's the best I can do.
Okay. And Casey asks, are you going to show this webinar again? I think what he means is, when he asks, he says, Jaffe, are you going to show this webinar again? I will. We will record the event, and we should have it available for you fairly shortly on our YouTube channel. And it's actually Jeffrey. But if you pronounce it the Greek way, it's Jaffe. All right.
No comment.
All right. Charles says, can you post some web links and some free DomiStock videos? Charles, I'll send you kind of the access that we've got. Just drop me a message, and we'll give you some of the materials, the link up to the DomiStock website and that kind of stuff. Just drop me a message, and we'll get it over to you, Charles. Okay. All right. That's the questions.
Okay, so
there's another one, John. John has a question. Does DomiStock use a set of predetermined stocks for its portfolio?
Can you repeat that?
Does DomiStock use a set of predetermined stocks for its portfolio?
Yes, it does. I had to, but you can always, thank you for this question. You can always choose your list, use the exploration for the weightings, and see the DomiStock portfolio weightings, and construct your own portfolio according to what you see. So it's gonna, suppose that you choose 10 ETFs or 10 securities, it's gonna tell you that you should add long, you should use this security up to 20% in your portfolio. You can use it to 10% or 5%, but the maximum is 20. And you should hedge that 0%, or you should hedge that 30%. That is the 30% of the 20%, okay? So it's gonna help you construct any portfolio you want. And it is a tool to help you adjust the existing portfolios that we have here, which are already 10, but these are sample portfolios. And I'm very sure, because we were talking with Jeffrey about it a couple of days ago, in other, because MetaStock is expanding rapidly and advancing rapidly, and it is the #1 software, technical analysis software globally, and so it should do that. We're gonna have a chance to have even more portfolios with more securities in other MetaStocks that are gonna come in the future. So this is a beginning. But together we're gonna get more. We're gonna advance. We're advancing as you're advancing. So this is a good start for you to see how a sophisticated, very sophisticated tool works, and learn how to use this kind of tools. And there is more to come. Once we see that people actually appreciate it and use it very well, then I'm going to make it even better and give you even more of a competitive advantage. Anything else?
That's it. I kind of like this format a little bit, where we can say, John says, all I can say is wow. I like how you said, Panos, that it was a good start, because this thing is massive already, and it's probably by far the biggest add-on that we've actually kind of put into the catalog. I'm going to talk a little bit about that in a minute, but I have to say I kind of like this format where we talk a little bit, we take a lot of questions, and I think you've done a good job with it. So Casey says he loves your confidence.
My confidence, it's not a confidence, it's passion. It's passion, because I'm not here to, you are my co-fighters. This is a fight. and I know the weapons that the competitors use. So what I'm actually trying to do is to help you use these weapons so that you can come back tomorrow and help me to make them better. Because if nobody uses them, then it's just my perspective. So I need you. I need you to tell me what you need, and we can add it. We can add anything you can imagine. Anything you want, we can do it. The thing is, you have to appreciate it, to learn it, to understand it, and then together to fight in this endless stock market war.
Okay, let's do this. I'm going to go ahead and change the presenter screen back. We do have a special offer that I want to kind of show everybody over here. Let me go ahead and move this around a little bit. Okay, so again, fantastic add-on, very, very big. Some of the key things that it can help you do is custom forecasting, maximum profit, maximum loss, trading strategy analysis, automatic support and resistance. I mean, it's huge. This thing has well over 350 indicators in there, 25 scans, 8 expert advisors, and 13 templates. If you are new, I would recommend you kind of focus in on the 1-2 high system and the kind of the newbie type of systems. It's a massive add-on, and that's one of the things I like about DomiStock, as well as MetaStock in general, is they're tools that kind of grow with you. They're not something that you outgrow and kind of need to look for something else. The better you understand how to use these things, the better they are going to work for you. And because it is such a product that's kind of very, very big, we wanted to give you a really like a 3-month evaluation period. And so the way that works is normally the DomiStock pricing is like $99 per month, or it's $950 per year. What we're going to do is we're going to let you try it out. We'll have you pay for a month, and then we'll let you try it for 3 months. So you're basically paying about $33 a month, albeit you pay the $99 right away, but then that allows you to kind of go through the manuals, the training. We'll do some additional webinars over the next several months and kind of get a real feel for, is this something that's going to be really, really beneficial for you? If it is, obviously it's well worth $100 a month. And the ability to try it through June, through July, through August. It's a great extended trial, if you would. So if you'd like to take advantage of that, give us a call. You can give us a call at 800-882-3040. You can order online if you want to at metastock.com/DomiStock. And if you have questions, there's metastock.com/saleschat. So give it a try. We're getting some really good feedback on this already. I want you to try it out. So that's what I had to say. All right. Panos, do you have any final thoughts?
No, that's it. That's it. Everything I had to say. I said, if you let me talk, I'll talk forever. So
I know that.
let's go back and trade. Let's go back and apply what we know. And I'm here whenever you want a new webinar, whenever I can help. If you have questions, if you want to email anything, I'm here to help. And don't forget, we have a school at DomiStock as well. DomiStock is just part of MetaStock. You will not find it anywhere else. So the DomiStock website is to help you use the DomiStock for MetaStock add-on. That's it.
And yes, Casey, as long as you have MetaStock already, which I'm assuming you do, it's $99 is what you'll pay, and that'll cover you through basically all summer. You can get ready for the fall trading with it. Okay. Panos, thanks for your time. Have a good, what time is it over there in Greece right now?
It's 8 o'clock. 8 o'clock.
I'll let you get your supper on.
Okay, thank you.
All right, thanks for coming, guys. We'll see you at the next one. I'll get this archive and this recording out to you. And thanks for coming in.